Hi, I'm Paul Stamoulis here at Milken 2025. I have the pleasure of being joined by John Koudounis, President and CEO of Calamos Investments. John, thanks for taking the time.
Paul, happy to be here. Thank you for having me.
It's good to see you again. You're a veteran of Milken. You've done this for many, many years. I'm just curious, what are the themes this year and how might they be a little bit different than years past?
Well, if you look at the overwhelming theme, just let's talk about last year. I think AI was kind of at the top of the themes. This year, AI and technology is still there, but Bitcoin's been thrown into that. And then the underlying topic is tariffs. And so that's been this year's kind of major theme, kind of written theme, and then underlying theme has been what's going on in the world in terms of the political stability or instability.
And there's a lot of uncertainty. And Calamos has gone through a lot of growth. You're 40 billion, I think, under management now.
Just a little bit over that, yes.
Terrific. So a lot of growth, and you're known as pioneer in convertibles and alternatives, and really a risk manager. For many, this is some of the most uncertain investing times that the majority of Americans who are under 40 have had. So is that inuring to your benefit? Are people looking at the products that you specifically offer in the retail space, perhaps for the first time, as you have a market neutral flagship fund, for example? Are first time people coming to structured products, and do you see that in some of what you're doing on the retail side?
Huge influx in structured products. We're seeing a huge influx in alternatives, in liquid alternatives and regular alternatives. And we are very well positioned, as you said, as our DNA has great risk management and we have phenomenal options traders. And in this market, like you said, our market neutral has held in there and done extremely well. And so when people look at stability, risk management, what do we do in this type of situation? And so we tell our clients, you have to be comfortable and confident in what you've invested in, and know that you're invested in products that fit your risk parameters. And as risk managers, we're really good at dialing up or dialing down how much risk that someone would want to take, and have products to define that. So because we have a lot of products that handle risk really well, the DNA of convertibles, where you get protected a little bit on the downside, give up a little bit of the upside. There's a lot of things we do. So we have done extremely well in this environment. People have seen it, and we are definitely seeing a lot of inflows because of that.
I think that's great. And to that point, actually, I know you launched recently a new product in and around sort of the crypto space, which frankly has had a 10 plus year tail of being adopted. And so talk a bit about what you've done with the Bitcoin principal protected notes and what that product is, and really who are the ideal investors on that?
We had this idea about doing something in Bitcoin, and the reality is that the bus has left the terminal. Bitcoin has become so big that it's its own asset class. So how do we get involved? Well, the last 10 to almost 15 years since crypto's been around, it's been the number one performing asset class out of any type of asset class, right? Having said that, it's also one of the most volatile asset classes. So how could people participate in a risk measured manner in what we do? So there's a lot of people. I think the adoption rate in the United States is close to 12%. The rest of the world in its entirety, I think, is around 4%. So there's a lot of room for growth, right? And how do we bring more people into it? So if you can get people more comfortable by owning Bitcoin and not losing their shirt because it went down 20% in one day, that's how we can grow the ecosystem. So when the legislation was available and they came up with a Bitcoin index, the CBOE did, we were able to then launch the first principal protected, 100% protected Bitcoin ETF. And the way that works is if you hold it for a year, you get a certain amount of the upside. And the first one we did in January of this year was about 11.65% of the upside of Bitcoin. And if it goes down, you're protected. You
Get
don't lose
100%
any
of
principal.
your principal back.
And so ironically, when we launched it, Bitcoin was at approximately 104.5. And then within a couple of weeks, it almost hit 78. And it was actually a fantastic example on how this product worked, because while people were taking huge hits owning just long Bitcoin, you looked at, and it's very liquid, it trades every day. You could have gotten out of it and I think maybe losing 1% at its worst. But if you held it, you wouldn't even lost that. So it works. It does what it's intended to do. And frankly, that's what our success has been at Calamos. We create products that solve problems or issues for investors, and they do what we say they're going to do, at least most of the times.
And they're still liquid. They're completely suitable, but as we sit in this world where people may not have a strong conviction, right? So there's some defensive strategies and hedge strategies people are looking at, and you have the wealth and RIA community spending a lot of time right now trying to figure that out. Are they looking and in fact introducing structured products to their clients perhaps for the first time? Or is this something that's always been there and you just wait for the market conditions to kind of avail where the volume sort of kicks in? I'm curious.
I think there's always been an insatiable thirst for yield, and I think that it's going to always be a continual of products that can bring and deliver performance. And so it's not a new phenomenon by any stretch. It's definitely increasing. And we're also seeing a lot of the alternative markets that institutions have been involved with for many years. The retail class is coming into now. For statistics, a lot of the, if you look at some of the biggest sovereign wealth funds in the world, they have between 10 to 40+% of their portfolio in alternatives. And if you look at the average wealth customer, high net worth or just regular, it's a single-digit number. And that's definitely increasing as they see how the pros are running their money because of the performance the enhanced performance that they usually get.
I mean, you needed a few things to happen for this all to come to pass. So apart from the regulation, ETF on Bitcoin made it so, the options market made it so. Is this the first of several? Will there be an Ethereum, and will we just keep going here in this asset class? And are you in those rooms trying to sort of advocate along, or are you letting the market and its pace come almost to you? I'm curious.
Well, I think Bitcoin we could talk about it stands on its own for its merits in terms of the adoption and the size of it. And so we really like to go with more of a sure thing. And so that's not to say tomorrow we don't add to that, but for us, it's more increasing the fund and increasing the adoption rate and people's knowledge of Bitcoin than moving to as many as we can. So that's more important to us, is to get people comfortable with it, understand that you can actually participate in it without taking as much risk as just being long it. So we're more inclined to go deeper in that product with Bitcoin than we are just doing as many different tokenizations that out there. But that's not to say that as things become bigger that we won't look at that.
Makes sense. And then last question, really around regulation. So you were part of a jam-packed panel moments ago, and you made the comment which surprised me that sometimes regulation could be a good thing. We sit in a room of financial innovators that want deregulation. Talk a bit about what you think the role is. We have a very accepting administration at the moment. Regulation is sort of coming in to support the stablecoin sort of side of the world. How do you feel about where the U.S. sits as a regulatory matter in the space overall?
So my comment was typically deregulation is a great thing, especially to stimulate the economy when you let some of the guardrails go and you go from a lot of red tape to more of a red carpet environment, right? And so that's really something that I believe in, and I think just free markets are, based on. Now, having said that, because of the adoption of Bitcoin and that a lot of people don't understand it. It needs a little bit of playing rules. And because there's been lawsuits against big Bitcoin companies, that a lot of them have fallen to the wayside now.
From the SEC at times back in the day, right?
Exactly. So a little bit of regulation in order for people to feel comfortable that these are the game rules will be helpful and has been helpful in terms of being able to progress in that field. And we wouldn't be able to do this without having a Bitcoin index. And without it getting approved by the regulators, we weren't able to do it. And it wasn't until after the current administration was elected in office that they would even consider a conversation on that. And then things started to move, even though we were ready over a year, before that.
Makes sense. Well, you're clearly innovators and remain so. You have a sort of trend is your friend moment here, I think, with people really needing the products that you particularly provide at Calamos, and it's good to see that you guys are growing and growing well. So congratulations, and it's good to see you again.
Thank you. Great to see you always.